I don't think we can escape the AI wave. It's really dominated deal activity, I think not just in Europe, but globally.
The private market landscape is full of opportunities and challenges in 2025. Navina, let's run through some of those challenges, opportunities, things that we've seen within the market, within our snapshots that we published so far this year. One of the key things that has stood out for me has been the challenging macroeconomic environment, and that has been because of weak economic growth, rising interest rates or flattening interest rates now, persistent inflation as well. Economic growth has been hard to come by for major European nations. The largest European nation, Germany, their economic growth and GDP growth has flipped and flopped from negative to positive territory. We've seen weak growth in the UK and France as well. Where we did see a bright spot was the Netherlands, which recorded 1% economic growth quarter over quarter in Q2 2025. Tariff uncertainty and monetary policy remain top of mind at the moment as we head into the second half of 2025, and it's creating a lot of uncertainty within financial markets. With that, I'd like to hand over to you to talk through some of those private market trends that are key at the moment and who are the certain winners and losers, I guess, in the current climate.
Yeah, I think it's a great question. When we look at private markets in PitchBook, we always look at 3 buckets of deals, exits, and fundraising. Of course, within that, you can split it by region and asset class. If I look at both of those buckets, I'd say it's really the UK and private equity which is showing the most strength. In Q2, we saw the UK have £24 billion of private equity deal value, which was up versus Q1. And then also regarding exits, UK PE exit value was a bit above 7 billion euros in Q2, which was also up compared to France, another massive ecosystem within Europe that declined quarter on quarter in Q2. Regarding venture, I really think it's sort of Germany where we're seeing the most strength in deal value, up quarter on quarter and year on year, unlike other trends in core ecosystems such as the UK and France where we saw a decline. So why is that? Well, I think both regions, the UK and France, are doing better overall than the European fundraising landscape. European fundraising as a whole is a fraction of what it was in 2024. I'd say between France and the UK, France is showing more resilience. Capital raised so far this year is pacing above last year. But I should also note that, in 2024, France, we had a depressed year of fundraising, whereas in the UK, we had quite a strong year of fundraising. So part of it's just the base that you're growing from. Another part of it is just the sort of cycle within fundraising. If you had big raises one year, funds and firms are unlikely to, be raising vehicles unless you're sort of a really mega player every single year. So you would expect some sort of ebb and flow within capital raised in these asset classes. And the other dynamic is just the more intrinsic flow of capital in private markets. We've seen exit markets be weak. We've seen distributions be weak. And that all really just plays into the fundraising cycle that goes back to LPs and their allocations. So I guess that's sort of the picture within the UK and France. But I guess there's also Germany, which is a core region, and the Netherlands, you mentioned, Nalin. So what would you say we're seeing there in terms of fundraising?
I think it's a similar story to what you've mentioned. We've seen a few bright spots appear so far this year. Likely not to be many new records this year, given the elevated activities levels of fundraising within 21, 22. So we've seen a flattening and a kind of cooling within fundraising, and that's linked to the distributions point that you mentioned just there and what we're going to talk about shortly. Over in Germany, I think 1 billion euros was raised. Of that, 830 million of it was actually raised in one fund, and that was Aurelius's Opportunities Fund 5. So we are seeing certain LPs and certain fund managers close funds. However, we're not seeing that broad-based increase across all different types of regions just because there is less capital available within the market. We don't expect new records to be set. Overall, funds closing within record amounts of time, again, unlikely. However, to just see funds close is a positive sign. So LPs and GPs are still getting together and closing their funds despite no new records being set at the moment. Moving on to exits and public equities, we've seen contrasting changes across countries in Q2 2025. One area that I noticed that was really, really strong in Q2 2025 was the public equity landscape in Germany. So we track multiple indexes across our snapshot series, and the DAX 40 outperformed in the 1 and 3 year trailing periods, even outperforming the S&P 500, which has been the gold standard index for returns in public markets in recent years. Companies powering the DAX 40 returns were Siemens, Deutsche Bank, Allianz, and Airbus, among a whole host of others. And valuations among those DAX 40 components have been really, really strong. We've seen 6 consecutive quarters of growth, peaking at 18.9x in Q2 2025. So really, really strong growth with that index in Q2 so far this year. Public markets have been picking up in recent quarters, and this is encouraging to see.
Yeah, I guess the question is with that though, it's like interesting to see if that's actually translating to IPO activity and listings activity, because in the UK, for instance, the FTSE, it's not been as strong as the DAX, but we have seen it outperform broader European markets. We saw 7 listings in Q2 in the UK, albeit not from privately backed companies, but there have been IPOs or listings that have come through. But you compare generally the US to Europe, and in the US you've had CoreWeave, Hinge Health, Circle Group, more than $1 billion raises and big sort of tickets come through. In the Europe we just haven't seen that. We have sort of HBX in Madrid list around, I think, 700 million euros, but not really sort of the level in the US. And I think on top of that as well, although we've got names like Klarna that are supposedly listing now around September, it would really be a concentrated recovery. Our general sort of thesis is that we're still expecting this sort of IPO window where valuations and volatility are at a good sweet spot for listing counts to improve. We're really just expecting that more sort of be H1 2026 story in the best case scenario. What we're seeing now within venture is that most of the exits are acquisitions, so majority of exits are M&A or acquisition plays. And then by sector and vertical, there are obviously nuances as well. We're seeing sectors such as fintech and life sciences pacing near to last year, and AI, of course, pacing well above last year at the moment.
And on the public listing front, they have been subdued. Across the nations that we track in Europe, we've seen limited IPOs, public listings across markets. And that's not really surprising. Founders and management teams have avoided risking an IPO in the current climate. They don't want to erode valuations that they've built over multiple years. So it makes sense that public listings are quiet. However, as you mentioned, H1 2026 could be a more opportune time for public listings to take place.
Yeah, and sure. I think you've obviously got the high level trends in each country, but I think within each country there are obviously sectors and parts of each ecosystem that are winning and losing. I don't want to just launch into AI, Nalin, which we know is dominating everything. So maybe before we do, what are the sectors that are some of the standout performers so far this year when it comes to venture in Europe?
We have seen a strong increase in defence tech investment within VC. Across Europe at the moment, given political tensions and the reports that governments are increasing their military spending. Defence tech is the major standout performer, particularly within Germany. Notable deals included a 600 million euro round for Helsing in Germany, and that round resulted in them achieving a valuation of 12 billion euros, catapulting them to become one of the most valuable VC-backed companies in Europe. Another notable deal involved Quantum Systems in Q2 as well, and they received 160 million euros. So we're seeing defence tech players operating in different spaces, linked to defence tech in a certain way, receive funding, boost their valuations, increasing investment within that space in Q2 so far in Germany. Now, we must touch on AI though. Navina, what have you been seeing within AI in Europe?
Yeah, I don't think we can escape the AI wave. It's really dominated deal activity, I think not just in Europe, but globally. What we've seen is that now in Europe, around a third of European deal value sits within AI companies, and a little less than that, around 30% of European venture deals are to do with an AI company. Now, of course, I should mention that our verticals are not mutually exclusive. So you may have an AI fintech, you may have an AI defense company like Helsing. So there's various ways and there's various ecosystems that are growing within AI. It's a very complex market. But of course, deal value has been extremely resilient. Some of the largest rounds and the most valued companies now are AI companies. I think the other debate, which is worth mentioning here as well, is that, how AI is an AI company. I believe that there is a rationalization to come in the market. There are a lot of companies that are sort of maybe .ai on their marketing decks, but in terms of the actual fundamental business proposition within a company, how AI is the actual tech stack and the infrastructure. And our fintech analyst, for instance, in the US has done a really great deep dive on this, where he looks at how AI enabled is a company. And what he's seen is that in the US, around 37% of fintech companies are now AI enabled. And some of the criteria for this is offering AI as a core product or platform feature. Other things is, having acquired an AI company within an AI native product or infrastructure, or having made strategic hires in AI and machine learning domains. So I think there is more nuances as the market matures on, what an AI company looks like, which will also be interesting going forward within Europe. I think overall, we've seen that despite Europe's weaker economic sort of backdrop and sort of a mixed bag there when it comes to private markets, by asset class, we're seeing broadly private equity outperform venture when it comes to those three buckets I mentioned of deals, exits, and fundraising. And then by country, we're seeing sort of France's fundraising backdrop show strength, UK PE deal activity, deal value, and exits also grow sequentially. One thing, I'm looking out for, I think I mentioned it previously, within the second half of this year, is sort of that AI piece and sort of the bubble and the valuation trends within that. I think there is a lot of inflation in the market, and I'm interested to see how that progresses. As always, when you think about companies on their J curve and just markets on their J curve, there is a time of rationalization where a lot of companies will need to be consolidated. We've seen some acquisitions already take place in the AI space, but how that rationalization plays out within this sort of subset of venture, I think is something that's really interesting to watch going forward and will be key for the whole ecosystem. And maybe, Nalin, if I flip it back to you, if you had to sort of pick one thing that you're looking out for the rest of this year or looking into 2026, what would that really be?
One thing that I'm looking out for in the rest of 2025 would be the capital flywheel kicking on again. We've talked a lot about the lack of exits, the lack of distributions going back to LPs and GPs, and that is obviously harming then fundraising totals moving forwards. Again, we've seen fundraising trickle through. There have been bright spots, but what I'm really looking forward is better market conditions, more exits taking place. We've got a lot of large names within the VC-backed ecosystem, as well as the PE-backed ecosystem as well, that are potentially overdue an exit. And when these companies do exit, they're going to generate significant liquidity for their investors. And what those investors do with that capital is going to be really interesting. Are they going to look to deploy into new funds? Are they going to look to start new businesses? So that's what I'm really looking out for in the second half of this year. And hopefully market conditions can improve and we can see a bit more activity on the exit and fundraising front.
Yeah, I think there's obviously a lot to play for in the rest of the year when it comes to just a macro backdrop, when it comes to just private markets. So it's going to be really interesting to really see how things pan out in the second half.